Huge economic contraction has begun in China. Well, hasn't just begun. Obviously we knew ever since the end of January that we were facing this huge economic contraction. But we have the official Q1 GDP data now. It came out last night. The Chinese economy shrunk at 6.8% compared with Q1 2019 in Q1 2020. 6.8%, wow, big drop in the Chinese economy. Markets were expecting roughly 6%, so the market reaction to this data was fairly muted, to be honest. Markets, stock markets anyway, overnight were rallying on something else. Ken did a blog about that. Basically, there's this drug which is showing promise in treating coronavirus, which is a good thing. And also Trump laid out the guidelines for how the US should basically exit the lockdown. So those two things allowed the stock market to rally and kind of distracted everybody a little bit from this abysmal Chinese data. But guys, we can't ignore this Chinese data. Though the market may have ignored it, this Chinese data is almost like a premonition. Not a premonition, that's probably the wrong word, but it's like a preview of what we're gonna see in other major markets like Europe and you know, the US. Because basically China went into lockdown in January. We didn't go into lockdown here in Europe and in the US until mid-March, 2 months later. So we're gonna get Q1 data. It's not gonna be good because that back end of March, well basically March was pretty bad. But Q2 data, that is where the big drop in the US, Canada, Australia, Europe, that is where the big economic drop is gonna be. Can markets ignore it like they just ignored the Chinese data? Well, it depends. We're gonna have to see how things shape up in the next couple of weeks. A lot of what markets care about at the moment is how the epidemic is unfolding. At the moment, numbers seem to be stabilizing, which markets take it as a good sign. Markets also want to see how quickly can these economies come out of lockdown. That's also what we're going to be tracking. But as more and more evidence comes out about the extent of the economic damage, that is definitely going to be a test for risk sentiment. So you could see some downside risk in a lot of the risk assets that we talk about, AUD, NZD, CAD, crude, stocks. All of these things might be tested. Listen guys, we're going to be all over these themes going forward. All of the data, explaining how it all means in real time for our members so they can actually trade these moves in the market. Check out our memberships, follow us and subscribe to us here at Freak Network. That is pretty much it from me for now, and I'll see you in the next one.